What I wanted to do today was walk through definitionally how the investment community looks at impact and blended finance. There we go. Flip to the next page, please. Because I think sometimes these terms get confused, and I think sometimes these terms are used interchangeably when they really are two different things. First, on the left side of the page, you'll see blended finance. And blended finance, as Siddhi was talking about, really unites. Someone's got to shut off their sound. Blended finance really unites private and philanthropic finance. And I mean philanthropic, I mean concessional, I mean non-pure private capital. And by doing this, by bringing together both private and philanthropic concessional finance, you're able to reduce the expected risk return quotient. You're able to reduce the expected return of a particular project, making it more investable. In essence, this is broadening and making much larger the scope of projects that can be investable, because the IRR at the end of the day, because of the blended finance, is assumed to be much lower. As of June of this year, the reported blended finance available in the marketplace for 2022 was $181 billion, and this year it's ranging in the same area. 5,700 total commitments reported in terms of blended finance. And this is a growing area of interest, and it's an area where we have to keep a very good eye out for Ukraine because it's an opportunity. The other, impact investing, really targets allocations of capital to more than one outcome. So yes, they're looking, of course, for a financial return. This isn't charity and these aren't grants, but in addition to the financial return, they have other positive, measurable social and environmental impacts. And those impacts can be measured in a wide variety of ways. Some of the standards link back to ESG principles in a company or in a company's mission, and others link back to the World Bank, to the United Nations Sustainable Development Goals, the SDGs. The focus is on companies or institutions that promote ethical and socially responsible consciousness that accomplish socially conscious, socially responsible objectives. And examples can be so broad, so wide, that it can practically speaking include anything from environmental sustainability to social justice, corporate ethics. And that's one of the reasons the number you see on this page is so incredibly large, 1.164 trillion of reported impact investments over the last 4 or 5 years, since 2021. And the market continues to get bigger. If you combine these two, you create even a larger amount of capital for Ukraine for the types of investments that Siddhi was describing. You go to the next page. So just to give a couple examples, on the left, what you'll see is current demand for investments in that blue column. That blue column says $2 to $3 trillion measured globally in sustainable development needs. These are identified needs. And the private sector is willing to provide somewhere between 1.1, 1.5 to these needs. And so other sources and need to be identified. The demand in total, as you see for the sustainable development needs, is some $6 trillion. On the right-hand side, you're going to see how it works. You have institutional investors in the top blue box. They're going to be the ones investing the majority of capital, and they're the ones that are going to be making sure that there is a financial return as well as an impact return. Below that, you see concessionary investors. Sometimes we call them IFIs, but they can be more than international financial institutions. They can be NGOs. They can be specific types of funds that seek social environmental outcomes. These are typically providing smaller amounts of capital, and they're typically seeking lower returns. They'll even sometimes be willing to accept losses in order to achieve those other impact, those other socially responsible outcomes. So these are the groups that are making the investments. They invest, as you know, in different ways. It can be equity, it can be mezzanine, it can be senior shares. It can be, in the case of the concessionary investors, first loss shares, where they're willing to absorb the higher risks, so that the private sector institutional investors can enjoy the returns that they're expecting. And oftentimes these risks are these investments are de-risked even further with the help and the support of technical assistance. So there may be some pool of funds on the side that provide for consulting, training, and other to the project, not incorporated into the calculation of the returns, not incorporated into the IRRs, such that, again, you can reach certain lower expectations and you have the help of that technical assistance. I think it's important to note that, and we've got some examples here at the bottom, this really does happen all over the world in a wide variety of sectors. So you see here cross-boundary energy access, which was the first blended finance project focused on energy infrastructure in Africa. You see Agribusiness Capital Fund, ABC Fund, which invests in opportunities, expanding economic opportunity and social development for small landholders, small farmers, in particular women and young people. Again, these projects, this blended finance, would identify and target the objective they're trying to achieve. And in some cases, it's women farmers. In some cases, it's small business, microfinance. In other cases, it may be minority-owned businesses. Going further, you'll see FDN, FDN, which funded roads and bridges as part of a road program in the rural areas of Colombia. And lastly, the Tropical Landscape Finance Facility, which enhances smallholder farmer livelihoods by providing them with donor-based grant funding until the stable cash flow gets going. In other words, oftentimes startups will complain that they're unable to achieve financing. Blended finance can be an example if we're finding investors who are willing to provide donor funding for the initial low cash flow period. And go to the next page, please. Impact investing, slightly different, is really focused on stimulating something other than return in addition to returns, boosting governance, stimulating growth. And this network of $1.164 trillion is something that very, very many organizations are engaged in. So there is over 3,300 already registered, acting and working in this manner. And many of them need to come to Ukraine, which is why we're here today. Impact investing organizations are across the globe, as you can see from that global map at the bottom, many in Europe and in the United States, where the practice has been active much longer. And these pure play investors, impact investors, there's some names here, Blue Orchard Finance, Vital Capital Fund. These pure play really are focused on returns in a secondary fashion, if at all. They're measuring their outcomes. They're measuring the success of their projects with different types of reporting, different types of monitoring, and different types of measurable improvements. You see that it starts basically by saying, I have a desire to improve X. Let's call it the use of the practice of small farming. Then they contribute this investment capital. They contribute in addition to the capital, and they contribute technical assistance, they contribute knowledge assistance, training, and then they work to identify how to achieve specific outcomes. So I'll give you just an example of one of these impact investments. There was a healthcare project in Brazil, a $10 million healthcare project by a company called LGT Impact Ventures. And, there is a great deal of Brazil's population that didn't have access to healthcare or relied on poor quality healthcare. So this was the expansion of clinics across a wide variety of the network. And the investment was used to fund the CapEx, to fund the infrastructure, to fund the equipment, and to create a proprietary platform for management of the system. But the impact metrics that were used at the end of the day to measure whether or not that investment was succeeding was the number of low-income patients served, it was the number of medical services being delivered, the number of satisfied clients, and the number of repeat clients. Then it was not about only profit and loss. Profit and loss wasn't in the top 5 measurements of impact that the fund used. Go on, please. Next slide. So, how can we support Ukraine's reconstruction? Well, on the top there, you see what the impacts of this war have been to this economy. The damage has been tremendous. It was tremendous when the war began in 2014 with a 10% decline in 15. But what you also see is the resilience of this economy in terms of bouncing back. And you'll see that again here. The resilience of this economy begs for the type of support that blended finance and impact finance can make. And if we look at much of what Sidhi's already said, the areas of opportunity, which have been outlined by the World Bank in their recent damage report, the areas are so broad that they fit into each and every category that impact finance and blended finance have been focused on. This is an opportunity to target, for example, how do we want refugees to come home? What types of investments are going to be necessary to attract the labor pool to come back? We can target demining, and how do we make farmers capable of farming again at the level that they had been farming and feeding the world prior to this? How do we bring demining into that project and finance it to make farming possible? The space for impact investment, the space for blended finance is so broad that my expectation would be that when we see a presentation like this in a few years, you're going to see very, very high numbers on both sides. Our challenge is finding the projects to present and bringing those investors to Ukraine. I think I just want to say thank you to everyone. I guess there's not a closing page. I want to say thank you for the opportunity. I'm happy to take any questions, answer anything I might be able to do to help you identify and work to bring blended finance and impact investing in a big way to Ukraine. Thank you.